Hello traders, welcome to my video. I'm Francesco. My YouTube channel is called FreeFX, and I'm basically just going to give you a quick rundown of gold. Now, gold is something that I've talked about before, and I just wanted to kind of catch up with you on this. You can see on this chart I prepared for you. Basically, one of the things about gold that I kind of highlighted before, and I come back to now, is the current situation. Let's kind of go, this is a daily chart, and sort of get a bit more detail on that. So you can see that I prepared this earlier just to kind of show you what the situation is. Just ignore the red line for a second and let's kind of concentrate on the actual price action there. So you can see that we are essentially, when we were basically coming up to this triangle here, I sort of designed this triangle on an earlier version of this chart a few months ago, and I did a video on gold, in fact, more than one. But essentially, you can see that that's kind of a symmetrical triangle, depending on how you draw it, and that went on from early August to early September, for about a month and a bit. We had a sort of squeezing of price action, and then eventually we broke out below it, and that sort of didn't really get to the level that one might expect, which is kind of much further down. It was a breakout of notice, but when you look at the range there, it's about 150 points, 1821 to about 1960, so 140, something like that. If you go from this bit, if you go from here, it's a bit more. But essentially, if you are, it's actually even smaller if you take this first phase as your bottom, then kind of extend it to here. The tops that we've got stuck on are basically where the red line is, and you can see that from the breakout point, that line has been reached not once but twice, always with a kind of similar short burst and a deep sell-off, short burst, deep sell-off. So these 2 points, if I can just sort of highlight them in some way, that really show what the situation is at that point. So one of them is here. That's a big arrow there. If we copy that, and maybe I can paste it here as well. So, sorry about that. So essentially that tells us that we've got a double a double confirmation that price level essentially is protected, we might say. So we kind of broke above it in July of 2020, and that sort of led to this kind of triangle formation, and then we kind of been stuck underneath it again. So we haven't essentially progressed beyond that price level, and we're stuck in this box here between these levels, 118, whatever it is, 1820 something to 19. Nearly 60, as I said, and we're currently down here, so near the bottom of that range. This bit here, I've sort of taken that as a quick excursion there, but you can draw this box wider if you want to. You can make it like this, if you want to, and say that the halfway mark is like a mean reversion. That I don't really mind sort of how you, but essentially we are kind of boxed in. And you can see from here that we've got lots of wicks, so you might even say that actually that's that box size is actually appropriate for at least for the second half of that range. Now, what's really interesting about gold is that we talked about this before, and this bit here in red, by the way, is the currency correlation. So that's the correlation with Euro USD. So we are kind of nearly 1 point positive correlation, and then 1 point negative sort of towards the other end. So it's either moving like the euro, so banking on weak US dollar, or it's the opposite, so the euro is going in the opposite direction. And it's kind of flipped to negative, now it's back to, so it's very heavily correlated to euro, but that doesn't mean that they're moving obviously with the same conviction or the same kind of one directionality. So let's go back a little bit. So this red line that you can see running across there, if we go far back enough in time, you'll see where that leads us. So it's that red line is kind of halfway through that triangle. You see that, and we haven't really been past it. That's sort of 1950 something. Now you can see it's above this level in 2011, which was kind of former high. And when we came to sort of lockdown and a massive rush in gold purchase and a kind of investment or store of gold for hedging purposes or for whatever, for security, essentially the flight from risk, we kind of broke through that level. And we were below it, so that's a major break, but we haven't really progressed beyond that. So we broke basically above this historic high that was in 2011, and that's why that kind of long line there is useful to have, so you can see in relation to the past. And I'm just going to do a logarithmic chart at some point, but I'll just keep it there. Auto there. Now, so that's where we are in 2011 there. And then if you go further back, you can see that the chart here starts from 2006. So from the start of that chart, which is all we need for the purpose of relative to where we were, a few years ago, that's obviously 15 years, that's plenty of price action there, but I'll go into further detail in a minute. You can see that we basically had from 2006 in the kind of 550 something range, we had a straight run almost, obviously, with hindsight. This is a daily chart, a straight run pretty much up to these highs of 2011. So for 5 years, gold was appreciating. And just to show you the kind of smoothing out that, if I show you the 200-day moving average, you can see that we kind of broke below briefly here, 2008, but then obviously with the great financial crisis, there was a lot of searching for a safe haven, and that's what gold provided. So there we go. We stayed above the 200-day moving average from here over here. So quite a long period after this sort of short break there. Now this is where it gets interesting. This period I've highlighted here in 2011, this high, and down to here in 2013. So for about a couple of years, what we had is one triangle formation there. Very similar, this triangle formation, to the one that we've had recently, which I was showing you earlier there. Yeah. So depending on how you draw it, but essentially I think this is more of a descending triangle, and the one that we've had currently is more of a symmetrical triangle. And this descending triangle was quite a long one. We're talking about almost a year of price action, almost. And you had this break above it, but essentially then it retreated under that line. So price action was squeezing, and then it sort of broke above it again. But if you look at the box size there, we kind of stayed within these two price ranges, about 1800 at the top and about 1550, if you like, so 250 points more or less. And then another sort of, not triangle this time because it's more like a channel, but basically a downtrend, several points connecting that line. And then finally a break out of this box range in 2013, quite a big one, and then it continued on a downtrend all the way down to this area here. So big uptrend from 2006, consolidation ranging from about 2011 to 2013, so about a couple of years almost, and some kind of choppy price action, although obviously intraday there have been opportunities like this rally here in 2012, July up to sort of October 12. So, a few months there of obviously going higher, and then a sell-off here with a sort of downtrend and a breakdown, so great for shorting. And then a downtrend again, but a little bit choppy to begin with, and then further down, but still a downtrend. Now what happened next is really interesting, because the predicament that we're in now is this kind of boxed range of about, as I said, 120 something points, 130, 140 points. And this has only lasted, from September roughly. So about 4 months, give or take. Now, the previous kind of box of that size, at the end of the downtrend that I've highlighted here, we ended up sort of breaking above that trend line. And then we stayed in, essentially, apart from this chip here, we stayed in a range, more or less, if you kind of join up these points, 1, 2, 3, 4, 5, 6, it's kind of a range, although obviously within that you can see the 200-day moving average, broke below it and then above it and then below it again. But if you try and look for direction like you had before, downtrend and uptrend, this is kind of not it. And the range there is from about, let's say, 1200 or just below that actually to 1350. So I'm going to get, again, about 150 points, kind of similar to what we got at the moment. That range, if you want to call it that, lasted from February 16 to May of 19, more or less. So about 3 years. So that's a kind of massive choppiness there. Then we had a break and finally set above 200-day moving average, and then the slope really went up. You can see that first sort of uptrend really up to the skies, but the size of it as well, because we went from this high, 1350, and then from January 19. To let's say the first year and a half to the middle of 2020, we had a massive appreciation from about 1350 to 1750, so like 400 points in a relatively short time. And then I put this arrow there to kind of really show you that there's a kind of massive upturn. So it kind of went parabolic, and this massive rally, see, it's like day after day after day after day after day of buy. And this happened in the build-up through the pandemic, which was obviously about here. That was the kind of the March news. Market was still kind of finding its feet, started going, but really sort of went up here, July. I think maybe that's when it hit America, possibly not. Maybe, whatever happened there, but this is the kind of to do with that as well. So parabolic went up, straight up. Of course, it's unsustainable when you have that parabolic curve. You've really got to have something to revert to, and it reverted, it did, and it went back to this choppiness. So now we've got consolidation, and that's where we're at. I just wanted to show you something else as well. So we talked about 2006. Now the numbers don't stack up because it's a different counting in terms of the levels, the price levels, but you'll see what's interesting is kind of what happened between 2006 on this. So there's your 2006, just let me kind of get this further up there. Okay, 2006 is about here, and yeah, this bit. So that's kind of where our price action chart starts. It goes up there. Now before that, if you go back, this is a logarithmic chart, and you can see that it shows you how quickly it accelerated from the early 70s, and it quickly got to within about a decade, massive rally gold, and it got to these levels. Now these levels essentially weren't surpassed until the start of our chart, 2006. So all this a massive range is a kind of from this peak it sort of retreated, and then it was from about 2000 2001 that we started seeing a consistent rally. So in the greater scheme of things, we have been continuing to rally from 2001 to about 2011, that high that I mentioned before. There's about 10 years of uptrend. So if you can look at it overall, gold is really just rising, but logarithmically you can see that the range of movement within time relative to where we've been before is getting smaller. And maybe that's just a reflection of more liquidity due to QE and generally markets being a bit more squeezed as there are more and more participants. I'm not sure, but essentially the range is a little bit more squeezed. We don't have these massive rallies that we've seen before. And that's really what I want to show you, and I hope you've enjoyed my video. Sorry it's a bit long, but I just wanted to pack a lot of things in there. So take care, I'll see you in my next video. Bye.